Good afternoon, champs. I know it's been a little bit of a delay in the update, but bringing you a beautiful scene out of Africa and hoping to see some action here. Are we going to have a green day or are we going to have more of a red day? Well, there are more red candles in this background, so let's see if that actually plays. Jump straight into the chart. Right, we've had a very lethargic section in the TradFi markets, just ranging in the smaller range over here. In terms of the Dixie, you can see this SR level has been pretty well respected. The SPX is doing pretty much the same thing in reverse. We have a but I think essentially what's happening here is that the markets are waiting for most of the data to come out. Today, we have another major impact news release. We have got the PPI and we've got the job data coming out. Those are the two big drivers, and that's happening in a little under 2 hours. So, hoping to get some reaction out of the markets and a decision either way. If we have a look at our 12-hour high time frame chart, you can see that there's been very little decision. There's been quite a bit of indecision, in fact. So what I'm going to show you here is quite interesting development. The value area low of our range has actually shifted down. It used to be somewhere around this level. It's now shifted down, and that is a result of this major indecision that we see in the markets. Neither the bulls nor the bears are taking control. So, what does this mean in terms of our theory that we've been this large drop down? Well, it's now slightly tilted back in the bulls' favor. As you will remember, I showed you yesterday that on our Bollinger Bands, on our daily Bollinger Bands, we have been held down by this midline for quite some time. As you can see, it's been acting as resistance. Yesterday, however, we closed above. What does that mean? We should expect a rotation back up the top side of the Bollinger Band. Why have I drawn these ridges here? It's not the death because that's a lagging indicator. We want forward-looking data. So why have I drawn it here? Basically, what happens after a death cross is that price usually tends to track right back up towards the zone of the cross, like a magnet. That's a mean reversion, as it is known. So we've got that area there. We've our which has shown us pretty well where we can expect these peaks to go into. And we also have the top of this Bollinger Band over here. So all of that is converging into an area around 27.2K. What is 27.2K? Well, as we know, it is a pool of liquidity. If price does into this area, it would actually give us that lower high to continue this downtrend. So let's see how price continues. We have not yet broken below this all important major high time frame support and resistance. What I did want to show you, however, is the following. The last major rise, which got slammed back down again, had a volume spike up to the level over here. The next, if we can call it bullish price action, is really quite weak. See here, this volume candle is a whole lot lower, and it's just trending lower to give us this down sloping, very, very lethargic kind of bullish price action. That doesn't bode very well for the bulls. So the thing is, neither side is actually taking a major decision and driving price ultimately up or down. So let's just continue tracking that. Let's move on to our CVD analysis. So as you know, the spot CVD has been more of a sentiment tracker, and as you can see, a very, very slight, almost imperceptible curl up to the upside, where interestingly, perp side has curled slowly downward. So a little bit of opposing kind of theory there. However, what I did want to show you is the following. As you can see, this price line right here at about 26,300, if you draw this straight across, That's a flat line. Yes, we do have this little spike up here. I'm going to talk about that in a second. But you can see this perpetual CVD rising, and you can see this sort of flat line over here. That is a mildly bearish CVD divergence, and just build into the picture of what I'm telling you here on the higher time frame. I want to show you that candle a little bit further in exactly what happened. It looked bullish. However, what happened here was a little bit of a short squeeze, a mini short squeeze in this candle here, this green candle over here. As you can see, what happened was there was a drop in net shorts, immediately followed by the shorts rising up again there. And what did they do? They essentially stole these bears' lunch. All right, so these guys got stopped out. There were actually quite a few wrecked bubbles. And as soon as that happened, more bears stepped in and shorted that rise. So essentially, that's not a very bullish kind of price action. This, by the way, this formation here is known as railroad tracks. And anytime that you see that kind of a formation, it's not a strong reaction. So essentially, what a strong reaction here would be for the bulls is to see a lot more long interest coming into the market, but it didn't. So if you don't have this kind of software, if you don't have this volume analysis and footprint analysis software, if you see that candle formation, what you do usually tend to take out of that is that it is a weak kind of a move. And it can also happen to the downside. If it happens to the downside, then you know that's also a weak move down, not to expect continuation. Right. What did I want to show you here? Essentially, I'm going to just pull back the charts back to this area so that you can see yesterday's liquidity pool. I've marked that there, or I've left that there because I wanted to show you just how well price has been reacting to these levels that I am marking on the chart. These liquidity pools do move around from time to time based on market conditions and what traders are thinking. So currently, that's what it looks like. Yesterday, all of this liquidity was taken out. However, I want to show you really what kind of trades that you can expect from this from these areas that I've marked out. So yesterday, the first trade that I was able to take is this beautiful rise up into side into the premium zone of this range that that we're experiencing here. The first reaction that we got was wicking up into the first portion of this liquidity area for take profits. The next thing that happened was this beautiful, beautiful VWAP respect, and then this rise back again. This, by the way, this is the candle that I just spoke about, taking out the rest of the liquidity pool over here. But I just wanted to show you that in between this little mini range, there were fantastic scalps and day trades to be had. What I did say yesterday was that there were a few scenarios to take into account. One would be the expected moves of just essentially range rotation. As you can see, we are in this channel and it's been respected pretty well. Just continue this range rotation to the downside, something like that. Or expect the unexpected. And I said that potentially before we have some bearish news, which did come out yesterday, the market makers might want to put into this liquidity pool so that they can take advantage of the bearish news to slam it all the way back down again. That's what I was sort of betting on. It didn't quite pan out with this very lethargic kind of price action, although there were many trades to be had inside that little block. And potentially we see that continuation today. Like I've said, you do see this major indecision. Let's continue to literally just play it level to level, liquidity area to liquidity area. We also have these selling and buying imbalances that I mark out for you. There are usually very, very indicators of where you can expect a reaction We also have this recovered 50% vector candle down here. So, if you look at it from the probability of a range rotation play, you can expect this kind of reaction, or potentially yesterday's continuation of this play. There is, however, another thing I want you to consider. If you look at Tom DeMark's TD sequential indicator, you will have a look on the hourly time frame that you have this green 13 on the bottom of the candle. What this means is a trend exhaustion. So this indicator is showing us that on the hourly time frame that this uptrend is actually exhausted. Obviously, it's not an absolute, it's just an indicator, a very, very good indicator. It works on some data science models that have been used for decades. As you can see, I'm not going to get into the theory of the TD sequential indicator, but these are setups on the top side. As you can see, they've provided some very, very decent setups. We'll get into that theory, I guess, in the education modules. So, right, what did I also want to let you know about? The other thing to consider is yesterday I said to you that this candle over here regarding my VWAP band theory was the reversal candle. So, you know, in terms of what we have seen price doing yesterday and this trend exhaustion, essentially, I would have my bets on price going down. However, as you know, anything can happen. I've marked out all of the liquidity areas for you and the imbalances, etc. So what I'm going to do is just move this over to the side. If you don't have the software that I have, you can literally just mark out the areas that I have, and you can see what the price levels are, and you can get off of that. All right. Moving on to our longer term trade that we are being very patient with. We're still waiting for our triggers. Price is doing exactly what we expect. We're having these very gentle little level drops, and essentially we want this to continue further. We see that this value area low has into a resistance area. It was previous, which is exactly the kind of slow meandering price that we want to see moving down into our area of interest. It's also that, time-wise, it looks like it's doing exactly what we want. It'll be a few more days before we get our trigger condition. Trigger condition would be a potential liquidity here, a little spike down, a time frame change into bullish market structure for our trade to trigger. This is a much longer term time frame, and as you can see, we have a huge rise to the upside in what we expect might happen. Of course, we're going to be taking some profit along the way due to this huge price rise. What do I think is going to fuel this major price rise in the alts? And this is a major alt, so I do have some good feeling that we will get the capital rotation into these bigger alts out of BTC. So what am I doing? I'm tracking BTC dominance. As you can see, this is the previous month mid. It has acted as this perfect support resistance area for. As of yesterday, we broke upwards and we claimed our 50% area, and this should bode well in terms of a further rise of BTC dominance back up into the 52, 53% area where I do expect it to roll over. Once that happens, it's going to give our alts a chance to breathe, and this trade that we see in front of us a little bit of room to breathe. So we'll be continuing to track that. With that, champs, I am going to bid you farewell. May the odds ever be in your favor, and have a beautiful day of trading. Please, by the way, let me know. I have been taking a lot of your suggestions into consideration. I'm doing what I can day by day. It takes a huge amount of time, actually. Testing things, trying this, trying that, getting the volume correct, getting the camera settings correct, etc., and being a little bit more um, or a little less nervous, I guess, in front of the camera. So please tell me how I'm doing. I really do expect to be better and better at this as time goes by. And with your help, I'll be delivering the content that you love. Thank you very much.